Hi everybody, in this video I'm just going to explain to you a slightly more technical way that you can refer to this diagram for reducing or eliminating negative externalities using indirect taxes. So all of this still holds true, but when you're drawing your diagram and referring to it, there's something slightly different that you can do. When you're saying that you're putting in place your indirect tax, so that's a tax on goods and services, so that you're going to reduce the output from Q towards Q star, the socially optimum level of output, and you're going to reduce your net welfare loss of ABC. What you can say is that when the tax is put on to the good, you're essentially, we say, internalizing the externality. This is an expression which means that the person who is polluting, for example, or the person who's consuming a product which is a demerit good, which is doing them and others harm, then they will actually have to pay the tax, and that will internalize the externality. Sometimes we call it a polluter pays tax. So there are two ways of looking at this. Polluter pays, or we can say you're internalizing the externality. So when you put the tax in place, it's going to increase the marginal private costs for the person inside the bubble who's involved in the transaction, the firm, for example, that's polluting. And when you get them to pay the tax, their marginal private costs will increase, so the line would go upwards. And the objective is to increase this line enough so that marginal private costs, the new curve, is equal to marginal private benefit at the socially optimum level of output, so at A. So we want to increase marginal private costs by an amount so that actually the new marginal private cost equals marginal private benefit is at the socially optimum level of output. So because their costs have gone up, they now want to produce here at the socially optimum level of output. And you can see if their marginal private costs increase by the tax so that this is their new line, this is a pivot of a line, that would be just like having an ad valorem tax that's been put in place. And if you can get the ad valorem tax to just the right amount so that their marginal private costs are now exactly on this line here, now the free market level of output will now be the same as the socially optimum level of output. Another way of looking at this, instead of putting in place an ad valorem tax, indirect tax, you could put in place a specific tax. And if you want to put in place a specific tax, remember that would be a parallel shift to the left. And if this is completely effective, then your marginal private costs will increase to the point where the new equilibrium is at the socially optimum level of output, which is here. Just note that this, because it's a parallel shift, this is a specific or unit tax. And this would be your marginal private cost plus your tax. And in both cases, whether you have the ad valorem tax or whether you have the specific tax, your new marginal cost equals marginal benefit private, so marginal private cost equals marginal private benefit is here at A, and you'll be at the socially optimum level of output. So that's just a slightly more technical way of describing the diagram. You can do it this way, but you can also do it the way that I explained in the last video.